Okay, so something wild is happening in the world of finance right now. Two of the oldest, most ancient forms of money, we're talking gold and silver, are suddenly smashing records, hitting all-time highs. And it's got a lot of people scratching their heads, trying to figure out what is going on. So let's dive in and try to solve the mystery behind this incredible precious metals rally.
And I'm not kidding when I say incredible. The predictions we're seeing now, well, market insiders at Bullion Vault are calling them beyond outlandish. I mean, think about that. These are professional analysts who totally missed last year's surge, and now they're making the most bullish calls of the entire 21st century. So just how big was that surge they missed?
Well, just look at these numbers from 2025. Gold put up a massive 65% gain. Solid, right? But silver? Wow. Silver went into overdrive, soaring 144%. That's its biggest single-year gain in more than 40 years. And that right there, silver's dramatic outperformance, that is a huge clue that this isn't just your standard run-to-safety kind of market.
Which leads us to the big question, the one we're here to answer today. Why now? I mean, why are these ancient metals, things that have been around for thousands of years, suddenly the absolute hottest story in all of finance? To figure this out, we've got to follow the clues.
Okay, our first clue. Well, it's not where you'd normally look, like in supply and demand charts. Nope. It's in the halls of power, in the headlines. Turns out the new bedrock propping up these prices is geopolitics.
The global law firm Wheaton Case really hit the nail on the head. They said, we're in a policy-driven business cycle. Now, what that really means is that what's moving markets these days isn't just pure economics anymore. It's politics, it's government action. The takeaway here, the old rulebook is out the window.
And this isn't some abstract idea. We're talking about real, tangible global risks. At the World Economic Forum, the #1 risk on everyone's mind was geoeconomic confrontation. You've got intense tensions between the US and China, you've got President Trump making new demands on NATO. All this uncertainty is sending investors running for cover, and gold has always been the ultimate storm shelter.
You know, it's not just regular investors feeling the heat from all this uncertainty. And that brings us to clue number 2. The biggest fish in the financial ocean, the world's central banks are going all in on gold.
This chart right here is so important. It shows that central banks buying gold isn't just a temporary fad. It's a real, sustained, structural shift. You can see they've been consistently adding more and more gold to their vaults for years, and the pace is only picking up. This isn't some knee-jerk reaction. It's a strategic choice to redefine what they consider a safe asset.
And what's so fascinating is that every country seems to have its own angle. China's building up strategic reserves, maybe to challenge the US dollar down the line. Russia sees it as a way to resist sanctions. Turkey's using it to try and stabilize its own currency. And then you have countries like India who just see it as a smart long-term way to diversify. It's this quiet global move away from the usual asset.
But you know, gold is really only half the story. To get why silver is just blowing everything else out of the water, we need to look at our third and final clue. And that is silver's absolutely insatiable industrial demand. This is where things get, well, explosive.
Just look at this number for a second. In 2024, the world used 176 million more ounces of silver than was mined or recycled. That's a massive deficit. And get this, it's the 5th year in a row that we've seen a shortfall. The world is literally using more silver than it can get its hands on.
So where is all this silver actually going? Well, this chart spells it out. Sure, investment in jewelry are big deals, but look at that huge slice of the pie. About half of all silver demand comes from industry. The key thing to understand is that silver isn't just a pretty metal anymore. It's an absolutely essential industrial commodity.
And the tech that's just eating it up. It's the stuff that's building our future. Solar panels are a huge consumer. Electric vehicles need it for their electronics. And now, there's a new player in town. The massive data centers that power the AI revolution all rely on silver, because it's the best electrical conductor, period. And here's the kicker. For a lot of these critical applications, there's just no good substitute.
So you've got this perfect storm, right? Geopolitical risk, central banks buying everything up, and this massive industrial supply crunch. The natural question is, how are people actually investing in this? So let's quickly break down the main tools in the investor toolkit.
Okay, so you've basically got two main roads you can go down. First, there are ETFs, or exchange-traded funds. These are designed to just track the price of the metal itself. Super simple, usually low fees. The other route is buying shares in the actual mining companies. This gives you the potential for way bigger returns, but it also comes with more risk. You know, things can go wrong in a mine.
So if you're leaning towards gold ETFs, here are a few of the big players. Take a fund like IAUM, for instance. Its performance has mirrored gold's incredible run, and it does it with a super low annual fee, an expense ratio of just 0.09%. That's pretty cheap.
Now, for silver, you've got a bunch of different flavors. You have a mining company like First Majestic Silver, that's ticker AG, which is often called one of the purest ways to bet on silver. Then there are streaming companies like Wheaton or WPM. They don't actually own the mines, they just help finance them and get a cut of the silver, which is a lower risk model. And of course, you've got the big one, SLV, which is an ETF that just holds tons of physical silver bars in a vault.
All right, so let's put all the pieces of this puzzle together. We have geopolitical chaos, we have a fundamental strategy shift from central banks, and we have a historic supply squeeze in silver driven by tech. So, what's the verdict? What does it all add up to?
You know, I think this one quote from White and Case really just nails it. The value of metals like gold and silver is now being shaped more by human decisions, by governance, than by how much stuff we can physically pull out of the ground, by geology. Politics and technology are in the driver's seat now.
So when you think about it, gold has become this essential hedge against political chaos, and silver is a non-negotiable ingredient for our entire technological future. It all boils down to one final big question. In this new world, are gold and silver no longer just an alternative investment, but maybe the new essential asset?